Back. I want to bring in Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Alan, let's talk some semiconductors and let's talk some tech. Intel's got a CEO that's going to stick around from the interim for the long term. What say you?
Well, I've got market momentum on my mind. So we've had a big U-turn, obviously, here in 2019. You see tech now up 15, 17% off their extreme lows. There's been a very strong turn. Now, you've got to remember that earnings growth is a powerful drug, and that's what's got this market up and away. Looking at Intel, it's been left behind. It's been traded over the last 52 weeks. It's unchanged. So from a bullish standpoint, from a leverage standpoint, I'm more bullish than bearish. We've been trading between 45 and 50 since August, and it looks like it's getting ready to break out of that range.
Okay, so Intel has been just getting hit on all sides, basically, by competitors trying to take the data center business, but the technical perspective, the chart here has kind of reflected the stock kind of being in no man's land. What makes you think it's getting ready to pop, Alan?
Well, what I'm looking at here is like we've talked about last time. Remember a couple weeks ago, what did we talk about? AMD?
Yep.
Not much good news on AMD, and what happened? We had a 20% pop in the stock, and the option that we talked about gained more than 100%. Now, the same kind of thing is to set yourself up for success using not only the right stock, but the right strategy. So I'm looking at Intel, trading sideways, going nowhere fast. So the risk reward favors a bullish breakout, obviously with the market continuing to move higher. So what I'm looking at is an in-the-money call. So I'm looking at a $42 call. $42 is the low for this stock in the last year. So I have the right to be long at 42. Think about it. Would you rather put in a limit order to be long it, to buy if it dips down to 42, or you can buy an in-the-money call? That option's trading for about $7.50, and it's trading right now here at $7.50, and it's $6.50 in the money. So the break even's only $1 higher, and the June option has almost 5 months of time for good things to happen and for that breakout to come to fruition.
So it's interesting, the upside here, then I guess unlimited, but also the downside is what you basically will
Exactly.
just take. It's not a very high risk play, basically, is your point.
Right, that's the chip you're putting down here on Intel. So instead of buying the stock and tying up money tying up the cash, you're buying an option. So your risk is limited to the $750. Mathematically, you could put a stop loss on this option as well, because if it gets down to where it loses half of its value, either the stock's gone the other way or you're running out of time. So those are the two things that work against you. I'm taking time out of the equation by buying a June option. I'm expecting something to happen sooner than that, but I have plenty of time in case it doesn't. The PE ratio is 10 on Intel, and it looks like it's set up for something, and this is a way to put down a limited risk play that's going to give you a pretty healthy payoff. 55 is the upside target if it breaks out of this range, and so this option would have a nice healthy gain.
All right, there we go. You got that 50-day creeping up towards the 2 for those golden cross watchers, I guess, something like that. Alan, appreciate it. Like it, and we're going to continue to talk about the chips here too. Very appropriate trade. Alan Nuckman is the Chief Market Strategist at Agora Financial, joining us from the CBOE. Up next, let's talk